all the exemptions contained in this notification that we have discussed till now, these are common exemptions which are applicable either the supply is intrastate or the supply is interstate. In both the situations, all the exemptions are applicable. Is it okay? Intrastate or interstate, in both the situations, all above exemptions are applicable. Now, in addition to notification number 12/2017, one of the notification, namely 9/2017, is issued under IGST Act 2017. Notification number 9/2017, it's issued under IGST Act, and consequently it will be applicable only in case of interstate transaction. Keep in mind, all the exemptions that are contained under notification number 12/2017 that we have discussed till now, these are the common exemptions whether the supply is intrastate or the supply is interstate, in both the situations that are applicable. But the exemptions which we are going to discuss are applicable only in respect of interstate. Basically, these are some international transactions which are exempted from GST, exactly which are exempt from IGST, because in case of international transaction, IGST is imposed and some of the international transactions are exempted from GST. Is it okay? That's why the exemption notification 9/2017 is applicable only on international transaction or interstate transactions. Now, first point is entity, meaning hereby non-taxable territory, and this is the analysis point of this discussion. Basically, this exemption has been divided into two parts. First one is here. First one is here, and second part of the exemption is here. Is it okay? Now, in such a situation, supplier of service located in non-taxable territory and the recipient is located in taxable territory, when such kind of situation is arised, it is called basically import of services. Is it okay? It is called as import of services. And we know very well that in case of import of services, reverse charge is applicable, that is recipient liable to pay GST to the government. Right, sir? So imagine if there was no exemption in such particular situation. This is import of, and we have linked so many times the transaction of import of services at many places. But this time recipient is government, individual for personal use and charitable trust. In all the three situations, one thing is common. These are not a registered person. These are not a registered person due to its own activity. Due to its own activity, he has no registration and not required to pay any of the GST on its own activity. Government departments, okay sir. Individual for personal use, okay sir, no issue at all. Charitable trust, we know very well, like charitable activities conducted by a recognized charitable trust is exempted from GST. So, it is quite clear, due to own reasons, due to own activities, these are not required to get registered himself. But suppose if it is liable to GST in case of import of services, if it is liable to GST, then it will definitely be classifiable under reverse charge mechanism. And as per the provision of section number 24, recipient is required mandatory registration under section 24. If it is required to get registered just because of import of services, all these, just imagine government itself required to get registered himself under the GST law. Charitable trust which is otherwise exempted, not required to pay GST, not required to have any registration, but just because of import of services, trust need to have mandatory registration under section 24. Is it okay? Yes, sir. So government don't want to do like this, so that's why government create an exemption notification, and all these kind of services imported by such a specified person are exempted from GST. Is it okay? Yes, sir. So second point is this, but one of the exception of this element, suppose specific case thereof, something special. Suppose in case of OIDAR, we have already linked the concept of OIDAR. In case of OIDAR, online information database access and retrieval services, if these kind of services are imported from outside India to India, in such a case, it will be liable to GST. It was the deliberation of the government that at any cost it would be liable to GST. So even if it is imported by, suppose imported by individual, imported by an individual, suppose 10-year kids, I have given the example earlier, 10-year kids for personal uses, like taking services of Netflix, taking services of Zapak.com, like online gaming, etc. So government deliberately imposed the GST on such kind of activity. We have already discussed this point. But the point is this, now at this moment, one of the exemption given here says like supplier located outside India and recipient in India, and any kind of import of services are exempted. So by virtue of this exemption notification, OIDAR service automatically fall under this exemption, and the dream of government definitely be broken. So accordingly, government don't want to do like this. That's why government create an exception of this point and clearly said this exemption would not be applicable if import of services is OIDAR. So we can simply said like import of, not supply exactly, import of services. I am talking about the exemption, import of services, okay, exempted, but except OIDAR. Import of services is exempted, but except OIDAR. This provision is not applicable on OIDAR services. Is it clear? Yes, sir. This was the first discussion of this exemption, or it can be said as part 1 of the exemption. Now, we are going to discuss another part of the exemption. Supplier located in USA entity and the recipient is also located in entity, meaning thereby both the parties located in entity. But suppose service is of construction of a building, and the construction of a building is within India. Suppose in Delhi, building is constructed. That is USA construction company constructing the building in India on behalf of the client that is located in Japan. Right? Now, we should make a linkage of this concept to clarify each and everything in perfect manner. Now, is it a service? Yes, sir. Construction activity is a kind of service. Second thing, is it termed as supply? Yes, sir. ABC test has been fulfilled, so it will definitely be classifiable as supply. Yes, sir, it is supply. What is the nature of the supply? Sir, the origin of the supplier or origin of the supply is location of supplier, that is USA, and the destination of this supply would be, that is place of supply would be. Now we will have to check which section shall apply, section 12 or section 13 of IGST Act. Section 12 is stated where both the parties located in taxable territory, then section 12 is applicable. But as per the statement given by section number 13, if one of the party located outside India or both the parties located outside India, then section number 13 gets attracted. So as per section number 13, in case of immovable property linked services, the place of supply would be the location of immovable property. Is it okay? Yeah. So accordingly, finally, the place of supply would be Delhi. Yes, sir. No issue at all. And in such a case, it will be treated as interstate supply, that is IGST would be applicable, because we know very well all international transactions are called as interstate in the world of GST. Okay. Now, problem is this: who will be the taxable person in this given scenario? Sir, taxable person, whether government would collect tax from the supplier, which is out of the control of the Indian government, whether by applying reverse charge mechanism, government is able to collect GST from the recipient. The answer is no, because recipient also located in non-taxable territory. And this is the basic fundamental rule of application of reverse charge mechanism, is this, that recipient must be located in India or in taxable territory. But in this particular situation, since both the parties located outside India and government is not able to collect GST from any of them, so we are not able to collect. That's why since government is not able to collect GST, that's why government make it as exempted supply, my dear. Is it okay? Yes, sir. So if both the parties situated outside India and place, sir, what would happen if place of supply is also outside India? Sir, in such a particular situation, if place of supply also outside India, then no questioning of GST. It will not become a question in Indian scenario. Question may be only then when both the parties situated outside India and the place of supply is within India. So in such a particular situation, government exempt the same. Now look at the another scenario. When we study place of supply, gate number 3, at that moment we have seen, just try to remember your section number 12 subsection 3 and section number 12 subsection 7. Section 12.3 relates to immovable property. Is it okay? Yes, sir. And 12.7 related to event linked services. There was a proviso there. Listen to me very, very carefully. One of the proviso was there, like when both the parties located in India, and place of supply is outside India. That is just opposite the situation which we are discussing here. Here both the parties outside India and place of supply in India. But when we study place of supply, there was an opposite position. Both the parties was located in India and place of supply was located outside India. In such a particular circumstances, what the government do? Government make a provision of government make a provision of, in both the situations, when both the parties located in taxable territory and place of supply fall an entity. In such a case, there was a provision of U-turn. Remember, there was a provision of U-turn in this particular situation. And government said, if both the parties in India, then why we are not collecting GST on such circumstances? So government create an exceptional provision there of U-turn, that in such a particular situation, place of supply shall be deemed to be at the location of the recipient, so that GST would be collected. Is it okay? Yes, sir. At that time, we are feeling that it's a cheating by the government. Since practically, naturally, if place of supply is outside India, then why to pay GST to the government? Basically, government take a revenge of this exemption. Basically, government take a revenge of this exemption in section number 12.3 and section number 12.7. Here, government will have to, in this particular situation which we are discussing here, it's basically, it's the problem of the government that government is not able to collect GST, and government will have to make exempt, like angur to khatte hain, but government take the revenge in opposite situation by collecting GST, by treating a provision like this, that in spite of it is naturally fall outside India, then place of supply shall be deemed to have been treated at the location of the recipient. Is it okay, my dear? Yes, sir. Now come at another discussion. Yes, sir. Yes, sir. Now one of the exception was also there with respect to ocean freight. We have completed our discussion given under part A. I repeat, import of services by the government, individual for personal use and charitable trust are exempted, but exception is OIDAR. And at the second point, B point, we are discussing when both the parties located outside India, even though place of supply within India, it will be treated as exempted services. Is it okay? And what is the reason of this exemption? This is the reason of the exemption, that government is not able to collect, and practically government take revenge of this exemption under section 12.3 or section 12.7 of IGST Act at the place of supply. One exception of this statement, when both the parties belongs to entity, but one of the exception thereof. Suppose here is the provision. I am just talking about ocean freight. Ocean freight is the exception of this provision. When both the parties located outside India, basically in continuation of part B, we are going to discuss in continuation of our part B point 1. Part B point number 1. Suppose here is case number 1. Listen to me very, very carefully, my dear. And here is the case number 2. We know very well what are the prime objective of the government with respect to international trade. The prime objective of the government, government always try to increase the export and always try to decrease the import. Is it okay? Yes, sir. For enhancing or increasing the export supplies, government exempt all kind of taxes therefrom. Government exempted all type of taxes. And one of the famous quote like export the goods or services, not the taxes. But when we talks about import, government charge multiple taxes on import supplies so that the cost price of the goods gets increased and demand accordingly may go down. That's why government tried to decrease the import in each and every efforts. Okay, sir. So here is import and this is export. Okay, sir. And one of the important thing which I would like to discuss with you, sir, when we check in case of export of goods, in case of export of goods, we have seen, in case of export of goods, we have seen that whether we are exporting by air, we are exporting by vessel. In both the situations, no GST was levied just because of our prime objective, and our prime objective is to increase the export so that export cost is not increased. That's why government doing so. On the another side, in case of import of goods, in case of import of goods, if we are importing by a vessel, then it will definitely be liable to GST. My simple question is this, whether it is the firm determination of the government to impose GST on it? Yeah, it's firm determination of the government to import GST on this just because of this prime objective. Is it okay? That government will always charge GST on ocean freight. It is called as, that is ocean freight. I am talking about transportation activities. Ocean freight, government will always collect GST on the ocean freight. Okay, sir, no issue at all. But when we talks about import of goods by air, in such a case, one of the famous Hindi quote is this, कि इतने कड़वे भी ना बनो कि लोग तुम्हें छोड़कर चले जाएं, और इतने मीठे भी ना बनो कि लोग तुम्हें घोलकर ही पी जाएं. If we generally the cost of transportation with respect to air, that is air freight, simply air freight in itself is so high that if we impose GST on it, then the cost price of the imported goods become too much high, my dear. So it's not feasible even for the importer and with the angle of the general public. तो इतने कड़वे भी मत बनो कि लोग तुम्हें छोड़कर चले जाएं, इतना महंगा भी मत कर दो कि कोई इसे खरीद ही ना पाए एंड कंपटीशन विद फॉरेन गुड्स गेट्स ओवर. ऐसा भी नहीं होना चाहिए. सो finally, because air freight is also high, that's why government especially exempt this situation and especially said like no GST would be levied in such particular circumstances. So this was the prime objective and GST treatment that we have already discussed. Now, one of the special circumstances that we are going to discuss. Yeah, we have already covered this portion. While we have discussed transportation exemptions, exemption belonging to transportation of goods. Now I am going to discuss two separate cases with you. Okay, sir. Now come on the point. Suppose we are importing the goods. Here is the import of goods, and shipping company belongs to non-taxable territory, and shipping company that provides transportation services, and I am importing through vessel. I'm not talking about aircraft. And transportation company belongs to, suppose, Japan. Transportation company belongs to Japan. Okay, sir, no issue at all. And the exporter of goods belongs to USA. Is it okay? Yes, sir. Now I am going to discuss ocean freight. I am going to link ocean freight, not import of goods. Is it okay? Yes, sir. So in such a situation, ocean freight, in such a case, who is the supplier of this service? So supplier is a shipping company. Okay, supplier is a shipping company which is located in Japan. Okay, and who is the recipient? In the definition chapter under section 2, we have seen like who is the recipient? The person who is liable to pay freight to the transporter, that shall be treated as a recipient. Is it okay? Okay, sir, no issue at all. And simply the person who is liable to pay consideration of that particular supply will always be treated as a recipient. Here is the importer party. Here is the importer party, namely suppose Y, and name of the exporter is X. Okay, yes, sir. Now, who is the recipient in this particular situation? Suppose Mr. Y liable to pay freight. Suppose Mr. Y liable to pay freight. Liable to pay freight in this situation. So, recipient would be Mr. Y. Recipient would be Mr. Y. Okay, sir. So, ocean freight is a transportation services? Yes, sir. It is a transportation service, sir. No issue at all. Second thing. Is it a supply? Yes, sir. All the ABC test has been fulfilled. So, it will be treated as a supply. Okay, sir. No issue at all. Third one is, what is the nature of the transaction? Sir, origin of the supply, meaning thereby, is it location of supplier? Yes, sir. And the location of supplier of the service which we are linking here, sir, that is Japan. And one more thing, my dear, what is the destination of this supply? Sir, destination. Sir, in such a situation, we need to check which section shall apply, whether section 12 shall apply or section 13 shall apply. Section 13 said when any one or both the parties situated outside India, then section number 13 shall apply. In such a particular situation, one of the party, that is supplier, one of the party, that is supplier, belongs to entity Japan outside India. So, section 13 shall apply. And section 13, subsection 9, applicable in respect of transportation services, right? Yes, sir. So, in this particular, the content or the statement given under section 9.3, like place of supply of transportation service will be the place where goods are destined. That is, the destination place or delivery place of the goods will be the place of supply for transportation services. Simply, it will be treated as, suppose importer belongs to Delhi, India. So, it will be Delhi, India. Okay. So, the supply, nature of supply would be interstate supply. Okay, sir. In such a case, who will be the taxable person? First of all, check it here. Like whether it is termed as import of service. As per section number 2 of CGST Act, we have seen to be an import of services, some conditions need to be qualified. First one is location of supplier should be outside India. Yeah, it's satisfied. Second condition, like recipient's location must be in India. And third condition, place of supply of the service must be in India. all the three conditions are satisfied, hence it can definitely be called as import of service. I'm repeating again and again. I'm linking transportation services. I'm linking ocean freight, not import of goods. Is it okay? So it is import of services. Okay, sir. And we know very well, in case of import of services, RCM is applicable except OIDAR, and this is not a case of OIDAR. That's why RCM would definitely be applicable. That is, recipient would be liable to pay GST. That is Mr. X, sorry, Y. Mr. Y would be liable to pay GST in such particular situation. And just keep in mind the prime objective of the government. Government will definitely collect GST on the ocean freight with respect to import of goods. Okay, clear? Yes, sir. Now, whether any kind of exemption? No, sir, no question of any exemption, because it's the deliberation of the government to impose GST on ocean freight. Now, look at the second scenario. Now, look at the second scenario, which I'm going to discuss with all of you. Okay, sir, no issue at all. Let's move on. Yeah, our case number 2 is here. Case number 2, my dear. In this particular case, I will make a single change. I will make a single change. Rest of the question will remain same. Sorry. And one of the change is this, that in case number 2, recipient would be Mr. X. Then what will happen? And the rest of the facts and data will remain the same. Here, exporter. Exporter of goods belongs to USA, namely Mr. X. Okay, sir. Second thing, I'm talking about import of goods, and during import of goods we are taking service of transportation service of shipping company. Shipping company belongs to Japan. Okay, and here is the importer, and here is the importer, namely Mr. Y. Right, sir? Okay. Now in such a case, supplier is obviously, I am just talking about ocean freight. I am linking ocean freight, my dear. So with respect to ocean freight, who is the supplier? Supplier is a shipping company. Supplier is a shipping company. Okay, yes, sir. And shipping company belongs to Japan. Okay, no issue. And who is the recipient? As I have earlier told to you, like in this particular case, I will make only a single change. This time freight is paid by exporter, and as per customs laws, when freight paid is exporter, then the contract is called CIF contract. We will discuss this point, CIF point, in customs as well. So freight is paid by this person, so the recipient liable to pay freight. Is it okay? Yes, sir. So accordingly, this person would be considered as recipient. So in this particular situation, Mr. X belongs to USA, shall be considered or treated as a recipient. Okay, sir. Now whether ocean freight, that is transportation of goods, is a service? Yes, sir. Is it a supply? Yeah, definitely, sir. This is a supply, no issue at all. what is the origin of the supply? Sir, origin of the supply means location of the supplier. And in this particular question, location of the supplier, supplier of service, supplier of service. Supplier of service belongs to Japan. So accordingly, origin will be the Japan. Okay, sir. And what will be the destination or place of supply of this particular service? Sir, as per section number 13 of IGST Act, where both the parties located outside India, then section 13 shall apply. In the present question, both the parties like shipping company and the recipient Mr. X belongs to non-taxable territory. So accordingly, section 13 shall apply. If section 13 shall apply, even section 13 subsection 9 shall apply. So the place of supply would be the place where goods are destined. As per section 13 subsection 9, destination or place of supply of transportation services will be the place where goods are destined, and goods are destined in Delhi, India. So accordingly, it will be the place of supply in this particular situation. Okay. Now, now come on the point. Place of supply is within India. No issue, sir. No issue at all. Okay. First of all, tell me, in such a particular situation, who will be the taxable person? Because supplier belongs to entity and recipient belongs to entity. Both the parties belongs to entity and government have no control over any of them. So from whom government will collect GST? One more thing, whether it can be termed as import of services, whether it can be termed as import of services, the answer is no. For being an import of services, location of supplier of service should be outside India. Okay, it's satisfied. Second thing, recipient's location must be in India. But in this present situation, second condition is not satisfied. That's why it cannot be called as import of services. Because in case of import of services, RCM is applicable, recipient liable to pay GST. But this service is not an import of services, my dear. Who will be liable to pay GST? Practically, generally, there is an exemption in this particular situation. In general, there is an exemption we have discussed earlier in this point, like when both the parties located outside India, then it will be exempted. But provision is this, one of the another target is not satisfied. Government target was ocean freight always be liable to GST to achieve its prime objective to decrease the import of goods in India by making it more expensive by imposing GST thereon. So it's the firm determination of the government that government will always charge GST in case of ocean freight with respect to import of goods. But now this exemption will create disturbance in government target. In general, it is exempted. In general, it is exempted, but target of government to charge GST on it. So that's why government create an exception in it. Government create an exception of it. So government create an exception that as ocean freight, that this exemption would not be applicable on ocean freight. That is, ocean freight will definitely be liable to GST. Is it okay, my dear? Yeah, definitely. So one of the exception is ocean freight. Now, one more challenge in this target that are set by the government. Sir, it is okay that it will be liable to GST, but the again problem is this, from whom government will recover GST. In this particular situation, मांगो उसी से जो दे दे खुशी से. If it is firmly determined that GST will have to be collected in any circumstances, it is set by the government. Now the question is this, from whom government will collect the amount of GST? Because sir, supplier is outside India, government has no control, but and sir, recipient is also outside India. Now from whom? Now from whom to collect? Whether from supplier? No. Whether from recipient? No, because none of them is under control of the Indian government, neither supplier nor recipient. So government make an illogical provision here. Government make a illogical provision that is importer liable to pay. One of the famous Hindi quote, भाई तू कौन कि मैं खामोखा. ये खामोखा वाली बात आ रही है. Importer, in this particular situation, importer neither supplier nor recipient, but he is liable to pay GST to the government. It is unethical, illogical and not lawful, because in this particular situation, how you will treat it? Whether it will be called as NCM or RCM? Whether it will be called as a normal charge mechanism? No, because supplier is not paying. It will be called as RCM. RCM is called when recipient liable to pay. So nor RCM. So it's an illogical provision, my dear. It's just government's determination that we will collect GST. So that's why importer liable to pay. धोबी की धोबन पे ना चली तो गधे को ही पीट दिया. मतलब in such a particular situation, government has no control over the supplier and recipient of the services. So उन्होंने क्या किया कि importer को ही पकड़ लेके तू पे करेगा. It's an illogical and unethical and unlawful provision given here, my dear, because RCM is also defined in the definition chapter that was clearly stated. We will call a particular transaction as fall under RCM only when recipient liable to pay GST. And in this particular situation, it can never be called as reverse charge mechanism and never be called as NCM, because none of the party paying GST and the third party, which is importer, liable to pay GST. I again repeat, I am talking about ocean freight. I am linking ocean freight related services, transportation of goods services. Is it okay? Yes. So what is the final conclusion of the whole discussion? Sir, what is the summary of the whole discussion? Summary of the whole discussion is, my dear, summary of the whole discussion. Summary. First point is here, like import of services by 3 specified persons, government, trust and individual for personal use. 3 persons is exempted from GST. Exempted from GST, and exception thereof, exception is OIDAR. Exception is OIDAR. This is the first point that we have discussed here. And second point, summary of second point is this like when both the parties located in non-taxable territory, when both the parties located in non-taxable territory, then it will be exempted. It will be exempted. Exception thereof is, one of the exception is ocean freight. Exception is ocean freight. This is the final conclusion points, my dear. Is it okay? Import of service by 3 specified persons are exempted except OIDAR, and when both the parties located outside India, then it will be an exempted services, and one of the exception of this exemption is ocean freight related to import of goods. I hope it is clear to all of you. Import of goods, my dear. Please give me a thumbs up on my mobile phone, on WhatsApp. Is it clear to you or not, my dear? And here is the legal text thereof. Like service received from a provider of service which is located outside India and in non-taxable territory by, who is the service recipient? Government departments, and an individual for personal use, and charitable trust. These are the 3 specified person, and OIDAR is the exception of this point. Okay. Second, person located in non-taxable territory. Okay. Second point is like supplier belongs to outside India, and the recipient person is also belongs to outside India, that is both the parties located outside India, then it will be exempted, but exception thereof is ocean freight. Ocean freight. That is, however, following will be taxable: service by way of transportation of goods. Service by way of transportation of goods by vessel from a place outside India up to the custom station, from outside India up to the custom station, that is ocean freight with respect to import of goods received by a person specified in the entry, right? Okay, sir, no issue at all. Now the discussion is over. First point of notification number 9/2017 has been completed, right? Okay. Now we are going to discuss our another point that is Reserve Bank of India. We have already completed this point. We know very well that is it's a global practice. In India it's RBI, and similar body also existed outside India in different countries to regulate, to implement, to execute, to supervise monetary policies, and Reserve Bank of India works as an advisor towards the government. So as per the best international practice, any of the services provided by the Reserve Bank of India or like monetary bodies are not liable to any kind of indirect taxes. So accordingly, we have also make it exempt from GST, and this was the statement given under notification number 12/2017, my dear. We have already covered it, and we have already linked at that place also. If RBI import the services with respect to forex, suppose custodial services, any kind of import of services related to foreign exchange, that will also be exempted from GST. Suppose if it was not exempted from GST, then what would be the consequences thereof? Sir, if it is not exempted, then liable to GST, and sir, it is basically import of services, and if GST was applicable, then it will cover under reverse charge mechanism, and Reserve Bank of India is not required to get registered itself due to its own outward supply. He is not required to get registered because he is engaged in making exclusively exempted supply. Section 23 of CGST Act talks about this. But just for importing the services, RBI need to get registered himself under reverse charge mechanism, because in case of applicability of GST under reverse charge mechanism, there is a provision of mandatory registration. So whether government would like to do so, कि the person who is not required registration due to his own activity, but when one of the person just importing, just taking the inward supply and is required to get registered on mandatory basis, it's not good. So that's why government exempt the same, so that RBI can be saved from all these kind of formalities. Is it okay? Yes, sir. So the legal content is here: services received by Reserve Bank of India from outside India. The most important line is in relation to management of foreign exchange reserves, in relation to management of foreign exchange reserve, for example, custodial services that are taken by Reserve Bank of India. Is it okay, my dear? Yes, sir. Is it completely clear? Yes, sir. Basically, this point has already been discussed along with this particular linkage. This point was exempted by notification number 9/2017 that we are discussing here. Is it okay? Yeah. Now, foreign diplomatic mission. Foreign diplomatic mission, meaning thereby I am talking about embassies. And what we know till now about embassies, sir? Sir, we know very well that any kind of outward supply, for example, visa issuance charges, etc., all these are not liable to GST. And accordingly, if embassy provides exempted services, in such a particular situations, embassy is not required to have any registration under the GST Act. No need of any registration. But my dear, one of the other important provision which are linked with the embassy is, suppose from Delhi or from India, from even within India, if embassy takes any kind of services, so such transaction would first liable to GST, and later on embassy will claim refund of the GST amount. Refund under section 54, that we will discuss in future. Under section 55, under section 55, general refund section is 54, but embassy gets special refund and have special refund section 55. Embassy claim refund of section 55. So ultimately such GST on inward supply never become a part of the cost of embassy, and for this purpose, because embassy needs to claim refund of the GST, that need to take UIN, unique identification number, and on the basis of unique identification number, embassy is not called as a registered person. He's just get UIN which are available on national basis, not state wise. It's a country level, it's on national basis. Generally registrations are required at the rate of state wise. If you have business in 4 states, then you need at least 4 registration, but UIN is provided at national level, not state wise. Okay. Now one more thing, suppose embassy import some services from outside India. It's import of services from USA. Import of services. What you would like to say? Whether such import of services should be liable to GST or it should be exempted from GST. Suppose if it is liable to GST, then what will be the consequences? If it is liable to GST, then it will be covered under reverse charge mechanism. And in case of import of services except OIDAR, recipient liable to pay GST under RCM. So, if embassy liable to pay under RCM, and that embassy will have to get mandatory registration under section 24. And if embassy have to get registration under section 24, formal registration, then the status of embassy will become registered person. If it is called as registration person and need special registration here, so now what was the purpose of taking UIN? So the purpose of taking UIN gets over. UIN just like a ring ceremony, and registration is just like a complete marriage. Registration just like a marriage and UIN just like a ring ceremony. So if you are finally get married, then why we need just only for like UIN? The objective of UIN get abolished. That's why. That's why government finally decide that not to charge GST on this. So finally, there is no GST with respect to embassy, neither on the outward supply nor on the inward supply. So embassy bole to no GST, and this is the international practice. No kind of GST either on the outward supply or on the inward supply shall be collected. So that's why government exempt the same. Exactly the same provision applicable on United Nations like WHO, WTO, UNESCO, WTO, WHO, UNESCO, UNIDO, etc., etc., IMF. So same as for embassy, that is services provided by WHO, etc., that are not liable to GST. Any kind of services domestically taken by United Nations, WHO, WSO, first of all, it is liable to GST, but they can claim refund under section 55. And if WTO, WHO, UNESCO, etc., that I'm talking about that offices which are situated in India. If all these are import the services, then it will definitely be exempted from GST. Is it okay? That is same treatment, same reasoning, same logic as applicable for embassy will be applied in case of United Nations and international organizations. Is it okay? Yes, sir. Now I am going to discuss about a special economic zone. We know very well what is the purpose of establishing special economic zone. So simply, the purpose of establishing special economic zone is to export, and export. So here is the export, and we know very well export the goods, not the taxes. So no GST would be applicable with respect to export. Suppose from India itself, that is one of the domestic supplier supply any goods or services to a special economic zone. So such supply termed as zero rated supply, we have already discussed while we are studying the definitions thereof. This is treated as zero rated supply. There are two limbs of zero rated supply. First one is actual export to abroad, and second thing, supply to special economic zones unit or the developer of a special economic zone. It is called as zero rated supply, and the supplier required to execute a bond, and finally no GST would be applicable on this supply. And moreover, the supplier who is supplying goods to a special economic zone would be entitled to have corresponding ITC. Supplier would correspondingly eligible to have ITC, and later on it can claim the refund of this ITC. So finally, I would like to tell you that when any kind of goods are moving from India to SEZ, that will be exempted from GST, no GST on such supply. Now the question is this, till now we have seen that SEZ has no relevance with the GST. Now one more thing I would like to tell you, Babu. Suppose from USA, SEZ imports some supply of import of services. Generally, we have seen like import of services falls under reverse charge mechanism and recipient liable to pay GST and recipient required to have mandatory registration under section 24. Now question is this whether GS special economic zone who have no output GST liability, neither on domestic supplies. So if we apply GST, then SEZ required to have mandatory registration and liable to pay GST. What say? Sir, it should be exempted. So there is a special exemption notification. Especially it is stated like if import of services taken by special economic zone, it would never be liable to GST. Simply the crux is this, SEZ bole to no GST. That's it, my dear. This is the final crux with respect to special economic zone. Now come on the point. I am going to discuss about foreign tourist. One of the person, the recipient, supplier is a person located in taxable territory. Suppose a tour operator like Sika Tour and Travels located in taxable territory in India, and such tour supplier provides services. Such tour operator provides services to a foreigner. And with respect to a tour that are exclusively in entity, meaning thereby recipient belongs to non-taxable territory and tour is conducted. Tour also belongs to entity. Recipient also belongs to entity. Tour is also exclusively conducted outside India. In such a case, logically, practically, ethically, and from the all angles, bingo, mad angle, from each and every angle, it should not be liable to GST because recipient belongs to entity, and the tour that are conducted by the Indian tour operator, the tour place is also outside India exclusively. What is the wordings? Sir, services provided by a tour operator to foreign tourist, that is belongs to entity in relation to a tour conducted wholly outside India. Tour also to be conducted outside India. The most important word in this line is wholly outside India. So suppose one of the tourists come to India with Sika Tour and Travels located in Delhi, and the tourist want to make a tour plan for Sri Lanka as well as Vrindavan, Uttar Pradesh. So what would be the position? Sir, in such a case, tour is not wholly outside India. It is a mixed scenario. Like some of the tour places in India and some of the tour places outside India. Then it will never be fall under this exemption. If any transaction not fall under the ambit of the exemption, that will be completely liable to GST, whole amount liable to GST. As if anything is not excluded from gate number 5. So when we discuss at it gate number 6, at that place we find that what is the assessable value? Assessable value is price actually paid or payable, my dear, and the whole price that are collected from the foreigner by the Indian tour operator, that will be liable to GST. Is it okay? So finally remember the word exclusive. Recipient belongs to entity. Tour is exclusively conducted outside India. only then it will be exempted from GST. Is it okay? Yes, sir. Now come on the next point. I am going to discuss about deemed distinct person. Deemed distinct person. I would like to elaborate this point in some detail. So if you wish to come at LMS, that is I have no place at this moment, so I would like to come on LMS. Yeah, here is the LMS. We are discussing exemption notification number 9/2017 and talking about branch office and head office. Suppose case number 1. Okay. Here is the head office of a particular company, and not case number 1, but complete discussion. Here is the head office, and branch office is outside India. It's belong to NTT. Is it okay? Yes, sir. Suppose we will make two cases within this frame. First one is import of services. If it is import of services, that is any kind of services provided by the branch office to head office, or vice versa. Maybe head office belongs to outside India and the branch office in India, or maybe like one Indian branch and another one is foreign branch, and foreign branch provides services to Indian branch. That may be any kind of import of services. We know very well when we are its import of services, both are deemed distinct person. Due to deemed distinct person, these are called basically the transaction between the deemed distinct person will always be treated as a supply. And finally, it is IGST is applicable, and taxable person would be the recipient, and finally it will be liable to GST, that is IGST. IGST would be collected from the recipient unit. Is it okay? Yes, sir. Now, before discussing the another point, come here. We know very well. I would like to recall some important concept to all of you. We have already studied, like if one of the person making outward supply which are taxable, if one of the person making outward supply which are taxable, so the person is entitled to have corresponding ITC thereof. Is it okay? Yeah. If one of the person, even the same person, engaged in exempted supply, so we know very well on taxable GST to be paid, on exempted no GST would be required to be paid, and ITC thereof would not be available. And the third scenario is this, sir, like one of the person making zero rated supply. Export transactions are called as zero rated. Zero rated had two limbs, as I told you earlier: supply of goods or services abroad, or supply of goods or services to special economic zones unit or developer of special economic zone. In case of zero rated supply, finally no GST is applicable. However, there are two mechanisms at this point, like first one is pay GST and later on get the refund, and another one is execute a bond, that in such a case you need not to pay any kind of GST. So finally no GST in this particular situation. Clear? Yes, sir. But the exception provision is this: we are entitled to have ITC thereof. I would like to tell you this important feature. In case of zero rated supply, we are entitled to have ITC, and if we are not able to utilize this ITC, we can claim refund of this amount under section 54. We are entitled to claim refund of this unutilized ITC. But in case of exempted services, we are not entitled to claim ITC thereof. Is it okay? Now see what the government did. Government said in case head office making supply to the branch office, head office making supply to the branch office, as per general scenario, what should be or what is actually done? I would like to tell you what should be the treatment or what is actually as per law. Actually as per law. Sir, if in case of import of services it is liable to GST, so consequently in case of export benefit must be given to the supplier. So sir, it is a service? Yes sir. It's a supply? Yes sir. It is a export in a nature, so it should be a zero rated supply? Yes sir. And correspondingly supplier unit will claim ITC corresponding? Yes sir. And later on can claim the refund. Is it okay? In case of import, you are charging GST. So in case of export, you must given the export benefit to the exporter. Even it is a transaction in between the deemed distinct person. But what the government did? Now, what the government did in this particular scenario? What the government did? Sir, government said, okay, it's a service, no issue. It's a supply, no issue. But it will never be treated as zero rated supply. We will call it as exempted supply. We have learned the definition of exempted supply. Exempted supply can be divided into three parts. First one is the supply who are falling under any 100% exemption notification. Second one is which kind of supply that are non-taxable, okay, and third one is nil rated. There are three components of exempted supply, and here government cover it under 100% exemption notification, namely 9/2017. That's why it is covered under the definition of exempted supply. And exempted, sir, whether exempted supply can also be considered as zero rated? Never ever. Exempted cannot be covered under zero rated. Zero rated is a different supply having different provisions, whereas exempted supply is a different supply and having separate exemptions, my dear. So accordingly, now what to do? Now what to do in such a particular situation? Government said it is exempted supply, my dear. So correspondingly, in such a particular situation, supplier is not entitled to have ITC thereof and no question of refund thereof. This was a cheating. This is a cheating, my dear. Okay. But I will definitely link. Up to this moment, you have the point up to it, but I will link this provision. Keep remember, link with the chapter of refund. Link with the chapter of refund. I will further elaborate this point in the chapter of refund, but as of now the picture before all of us is this, that is government try to cheat. Like when the transaction is in between deemed distinct person, they are charging GST under revert charge mechanism, but when we talks about export mechanism, that time they are saying that it will be treated as exempted services. Now final question is this, if exempted services is exported, now the question is this, exempted services is exported, whether that services would be treated as zero rated supply or not. This is my question. If any kind of exempted services, is exported, whether that can be termed, or when we export any taxable service, one of the supply that are liable to tax domestically, if such kind of taxable services are exported, that becomes zero rated. That becomes, if I making a supply of taxable goods or services to abroad, it becomes zero rated. Question is this, when we engaged in exporting exempted supply, whether it can be considered as zero rated or not. So don't wait till the chapter of refund, I would like to answer here only. Earlier was the position like no ITC, no refund, but later on government insert an explanation. In the refund chapter. The explanation said all exempt, all, that is export of exempted supply shall also be treated as zero rated. Shall be treated as zero rated. So as soon as the explanation is inserted, so after insertion of the explanation, so final picture would be what? Now if it is termed as zero rated, then my dear, in such a case supplier can claim corresponding ITC and also can claim a refund of that particular ITC. So finally, after the amendment, picture become the same that I desired, that should be the final picture. So actual and lawfully the same picture now is in front of all of us, my dear. By making an explanation that if we export the exempted services, that particular services will also be considered as zero rate supply and the supplier would be eligible to have any such kind of export benefits thereof. So say thank you so much for this particular explanation. So this was the discussion based on the explanation. Like always remember, export of exempted supply is treated as a zero rated supply and all the export benefits pertaining to zero rated supply would be available to the supplier. Is it okay? Yes, sir. Now come on the point, my dear. Come on. Deemed distinct, okay. Intermediary. I have already discussed the whole exemption when we are talking about like entity to entity. We have seen in the chapter of supply, e-magic, new magic, not exactly e-magic, that was the new magic of WG. And for entity, what was the provision of entity? I have already told you and again explain for you. This was the provision, my dear. Okay, come on the LMS. Come on the LMS also for it. Yes, entity to entity. Suppose here is Mr. X and one of the person belongs to USA. Here is the seller of goods, namely Mr. X. And here is the buyer belongs to Sri Lanka. Buyer belongs to Sri Lanka, namely Mr. Y. So in this particular situation, Mr. X mediate a particular transaction. Mr. X is an intermediary. Mr. X as an intermediary mediate the transaction in between the seller and the buyer. Goods are sold and directly dispatched to Sri Lanka. Goods are sold and directly dispatched to Sri Lanka. That's goods are moving from entity to entity. I would like to make clear, there is no import of goods in India. No import of goods in India. Goods are directly dispatched from outside India to outside India. Okay, sir, no issue at all. So, whether the transaction should be subjected to GST, one of our most important principle is the destination principle, my dear. If the destination of the goods not in India, we have no right to impose GST on such goods. That's why in the given supply, government said practically as per our logics and thumb rules, GST should not be levied on it. That's why government removed it from the second gate, from the definition of supply. It will never be called as a supply, so no question of GST. At that time, you have asked one question, sir, intermediary get commission to mediate this transaction. So what would be the treatment of the commission received by intermediary? So don't worry, make a linkage thereof. The solution of each and every concept is linkage, linkage and linkage, my dear. Come on the point. In this particular situation, who is the supplier of? Sir, here we are going to discuss the intermediary's commission, which is a service. So, who is the supplier of service? Sir, supplier of service is Mr. X. The name of the intermediary is Z. Z. Intermediary's name is Mr. Z. So, supplier is Mr. Z. Supplier is Mr. Z. And who is the recipient? So, recipient may be one party or maybe both the parties, like Mr. X and or Mr. Y. Maybe one or two parties be the recipient. Okay, sir. Here we are talking about a service. Yes, sir. It's commission agent type services. And second thing, whether it would be considered a supply? Yes, sir. It's an activity, business and consideration also received in form of commission. That's why it is a supply. What will be the nature of supply? Sir, nature of supply, like origin of the supply is location of the supplier. Origin of the supply is the location of the supplier, and destination of supply is destination of supply is sir. Which section shall apply? Either section 12 or 13. Either section 12 or 13. Sir, section 13 said whether supplier or recipient or both located outside India, that section 13 gets attracted. Here, one of the party belongs to TT and another party belongs to entity. Recipient unit belongs to non-taxable territory. That's why here section number 13 shall apply. And as per section number 13, subsection 8, what will be the provision thereof? Here, for intermediary, it is specially stated like place of supply of this service, place of supply of such kind of services would be the supplier's location, would be the location of supplier. The most important thing would be the location of supplier. Recently, there was a recovery of 30 crore was made by the GST department on the basis of section 13 subsection 8, just because of this. So always remember section 13 subsection 8, location of the supplier, and the location, suppose it is belongs to Delhi, so it will be Delhi. Origin is also Delhi, and location, that is place of supply, is also Delhi. Okay sir, no issue at all. And who will be the taxable person? We will see later on, but it is exempted by the government. It is exempted by the government. Government thinking about this like, I'm not saying that government has made a recovery of 30 crore in this particular case. I was said like on the basis of section 13.8, section 13.8 consisting multiple points, consisting like intermediary and like hiring of means of transportation, etc., etc. This service is particularly exempted. No question of GST in this particular situation. Is it okay? Yes, sir. Now, one of the most important and famous quote in Hindi, like गुड़ दिया है तो गन्ना भी दे देंगे, गुड़ दे दिया है जैगरी तो गन्ना यानी शुगर कैन वो भी दे देंगे. अरे जब हमने when we exempt, when we have not collected GST on the supply of goods itself, so we will collect GST on the intermediaries services with respect to that particular supply which is not considered as a supply under the GST regime. The answer is no. So it was the good is exempted. So practically the sugar cane, that is ganna, shall also be exempted from GST. Is it okay? Yes sir. Come on the point. This was the final scenario in this particular situation. Intermediary. Services provided by an intermediary. Services provided by an intermediary when location of both supplier and recipient of goods is outside the taxable territory. Okay. Following document shall be maintained for a minimum duration of 5 years. These are some of the specified conditions, no issue. So practically intermediaries location, service provided by an intermediary when location of both supplier and recipient of the goods is outside the taxable territory, then it will not be liable to GST. This was the position that was linked from new magic of WG, and these are the some conditions like copy of bill of lading, etc., that you must have relevant document to prove that you were engaged in such kind of supply and you get this commission due to this particular supply. You will have to maintain relevant records thereof to prove the same. Is it okay? Yeah. So here is the exemption that are contained in my dear in notification number 9/2017. Now come on the summary part. And what is the final summary of the discussion that we have discussed today? IGST exemptions 9/2017. First one is where supplier located in non-taxable territory, that is import of services. Finally, no GST on it, that is it will be exempted. In which where recipient located in taxable territory, it's government, personal use and trust. These are three special points that are discussed in first element. Okay, yes sir. And RBI and embassy, where the recipient is Reserve Bank of India, RBI, embassy or SEZ. In all the four situations, it will not be liable to GST. If services imported by RBI with respect to Forex, services imported by embassy, services imported by United Nations, services imported by SEZ. Basically, this was the exemption pertaining to import of service, yaar. Which kind of import of service, which kind of import of services, which kind of import of services would be considered as would be considered as exempted services. Okay, now exceptions thereof was like, and one of the exception is, my dear, like in this case, except OIDAR, okay. And one more thing, here is the separate limb of this activity. Recipient location is entity. In such a case, there is an exemption, but this particular exemption not applicable in respect of vessel. Vessel means ocean freight. Vessel means ocean freight. So both the parties located in entity, then it is exempted, but except ocean freight, and some of the specified persons getting importing services, then it is exempted, but except OIDAR. And in the opposite situation, in the first situation, it was like where supplier is an entity, and second situation is this where supplier located in taxable territory and recipient is a foreign tourist and tour exclusively for outside India, deemed distinct situation, and non-taxable territory, that is intermediary. These are the three situations where the person supplying the services located in taxable territory and supplying service to foreign tourists deemed distinct and entity, all these will be exempted from GST, and no question of GST at all, my dear. So this was the discussion till now. Is it okay to you? Yes, sir. Now I have some clarification that are issued by the board. Clarifications is not a particularly new law. These are the industry's query that are answered by the board. So simple, my dear. So my first question, so are you ready for this? Yes, sir. Sir, we are ready for this. That's great, my dear. That's great, my dear. Yes, sir. So here is the clarifications. Priority sector lending certificate. Now let's see what is the concept of priority sector lending certificate. Basically, the banks which are coming under the control of Reserve Bank of India are required, that is have obligation to lend at least 40% of their total lending to priority sectors. That is total lending of the bank, suppose 100 crore. So 40% of total lending, that is 40 crore, need to be lent to priority sectors. And if any of the bank not able to achieve the target for lending to priority sectors at least 40%, then the bank have to face a huge penalty from Reserve Bank of India. So what will happen in this particular situation? And now what is the GST treatment here? Suppose here is the State Bank of India, and the total lendings of State Bank of India is rupees 100 crore. Out of this, out of 100 crore, 55 crore to priority sector. To priority sector. Okay. Yes, sir. Sir, what are the priority sectors? Like education, housing, small scale industries, like that. Okay, sir. These are 7 to 8 priority sectors. So bank have to lend at least 55% for their total lendings. And suppose one of the bank, HDFC, total lending or loans given by the bank is 100 crore, but out of this only 32 crore given to priority sector. Only 32 crore given to priority sector. Is it okay? Yes, sir. No issue at all. Now, HDFC would face huge penalty from the Reserve Bank of India. There may be the three situations. Some banks may meet the target. Some banks may beat the target like SBI. And some banks may not able to meet the target like HDFC Bank. The banks that have meet the target, no issue. Beat the target, no issue. But the bank which are unable or not to meet the target have some issues there of my dear. Okay, sir. Now what to do? Now what to do? So now what to do? HDFC Bank is in problem. That now what to do? So here there was a concept, even it is developed by Reserve Bank of India, that overreached bank may sell priority sector lending certificate to the bank which are unable to set the target for a consideration. So in such a particular situation, sir, now HDFC want to buy PSLC certificate of rupees 8 crore. Need of HDFC just 8 crore. Whereas excess PSLC credit with the State Bank of India is how much amount? So it is 15 crore. It is excess by 15 crore, whereas it is underreached because there is a target of 40% of total lending, underreached or shortfall of rupees 8 crore. So in such a situation, HDFC would buy PSLC certificate from the State Bank of India. Okay, yes sir. PSLC certificate. Sale of PLLC certificate of rupees 8 crore, and this is a transaction which is mediated through e-Kuber portal of RBI. e-Kuber portal of RBI, where all the parties, buyer and seller, may transact their transactions. Is it okay? Yes sir. PSLC are tradable certificate issued against priority sector loans, agriculture, SSI, education, etc., so as to enable banks to achieve their specified target of 40% of the total loans of the bank for priority sector lendings. By purchasing these instruments, in case of a shortfall, because there is a shortfall with the HDFC Bank of 8 crore rupees, auction from overreached bank, overreached bank, that is the banks that have beat the target, that is SBI, the bank given more than 40% loan to priority sectors. Shortfall bank can fulfill their targets by purchasing such kind of certificates. Now, what is the GST treatment in this particular situation? One was the burning issue whether these kind of certificate would be considered as a supply of goods or supply of service. Is it goods or services? So there are lots of issues, lots of clarifications, and even with the taking of help of pre-GST scenario, it was liable to VAT, that is it was considered as goods and accordingly liable to VAT. So finally, after all discussions and all disputes, weightage given to PSLC certificate as given prior to introduction of GST, that is finally it will be termed or treated as a supply of goods and it will be finally liable to GST. For your kind information, rate of GST on the certificate is 12% and it is liable to normal charge mechanism or reverse charge mechanism. Sir, earlier from 1st July 2017 to 27th May 2018, it is fall under normal charge mechanism, and after 27th May 2018 liable to GST under reverse charge mechanism. That is, as of now it is liable to reverse charge mechanism. But for your kind information, I would like to tell you, RCM applicable on supply of goods. RCM on supply of goods is not a part of your syllabus. But for your general knowledge, I would like to tell you that it is also fall under reverse charge mechanism as of now. There is no exemption and finally it would be taxable at the rate of 12%. Is it okay? Yes, sir. That's great, my dear. This was the concept of PSLC, Priority Sector Lending Certificate, that are moved from one bank to another bank. Shortfall bank purchase from the overreached bank. Okay. Now another clarification. These are nothing new. These are the industry's queries that are issued, that are addressed by the board. Now, circular number 32/06/2018, clarifications issued. Clarification regarding GST in respect of certain services. Which kind of certain services are here? The concept of cost petroleum and profit petroleum. Quite interesting. Come on the point. Suppose, my dear, here is the government of India, and government of India gives a license to ONGC, to drill in the sea for exploration purposes or to extract crude petroleum from the sea and sold out the same in the market. This was the license given by the government of India to ONGC, and as per the terms of the contract in between, practically the position of government is just like a lessor and the position of ONGC just like a lessee. Is it okay? And as per the terms of the contract, I would like to tell you that total cost or expenses of exploration etc. Related to exploration, drilling, development etc. to be incurred by ONGC. All the expenses to be incurred by ONGC. Okay, sir, no issue. And second thing, yeah. And first point is the contract is this, and sale right to sale right of petroleum is of ONGC. ONGC has right to sell the crude petroleum, and after selling off, first of all, ONGC would recover its cost of development, exploration, etc., and the profit component will be shared in between ONGC and the government. This is the main terms of the contract. Sale right ONGC, and profit will be shared in 40-60 ratio, 40% to government and 60% to ONGC in the ratio of 60-40. Suppose ONGC start the work, and the cost of drilling and exploration development, each and everything is 10,000 crore rupees. Is it okay? Yes, sir. And after incurring the cost, crude petroleum sold by ONGC, petroleum sale price is 15,000 crore rupees. Okay, sir, no issue. And accordingly, the profit component would be 5,000 crore. That would be shared in between ONGC and the Government of India. As per the terms of the contract, there will be two parts of this profit element. That is, 3,000 crore will be allocated to ONGC or retained by ONGC, and 2,000 crore rupee, that is 40%, would be paid to the Government of India by ONGC. Is it okay? Yes, sir, no issue at all. Paid to ONGC. This was the concept. First of all, I would like to tell you, here is the word, as we have used cost. We have used the word cost. Technically, it is called as cost of petroleum. Cost of petroleum to extract, development, etc. Cost of petroleum, and or it can be simply said as cost petroleum, or simply can be called as cost petroleum. Is it okay? And second thing is the word used in it, profit. Profit means, that is profit from petroleum. Profit means like profit from petroleum, and profit. Profit is called finally profit from petroleum. Is it okay? Yes, sir. Now, the question is this, whether it would be liable to GST or not. This is the final question, my dear. First of all, I would like to link 2,000 crore rupees. In such a case, who is the supplier? Sir, supplier is Government of India and recipient is ONGC. Is it okay? Yes, sir. And it is basically licensing services, and supply can be classified as renting, leasing, licensing. It's a kind of license that are provided by the Government of India to ONGC, and in consideration ONGC gives 2,000 crore, which can be termed as a royalty. Is it okay? The share in profit, ultimately what the government give license to drill, and what the government get, rupees 2,000 crore. Is it okay? So finally, whether 2,000 crore would be liable to GST or not, my dear. So in such a case, it is a supply of service. It's a service. Yes, sir. Is it a supply? Yes, sir. It's a supply. No issue. It is a supply, sir. No issue. And finally, is it intrastate or interstate? That may be decided depend upon the origin destination of the supply and my dear, whether it is finally exempted because it's a service provided by the government. And you know very well, lots of services given by the government is exempted, and the separate notification number 5/2018 is issued with respect to thereof. This is the notification number, my dear. It is exempted. Now sir, what about what about cost petroleum, whether 10,000 would be liable to GST? Sir, it's not a question basically. In 10,000, it is the expenses incurred by ONGC itself. So no question of supply and no question of GST at all, my dear. So it can be simply said, the crux of this circular etc. and notification is this crux: cost petroleum and profit petroleum. Crux of cost petroleum and profit petroleum is no GST at all. That's it, my dear. Because you know very well, here government is completely involved in this picture, so accordingly GST cannot be there. Is it okay? Yes, sir. So this is the provision in between. Now we have our next small definitions. It is with respect to supply of goods by a retail outlet established in the departure area.